Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the last half an hour remaining and things are not really looking good. The 24,000 mark was tested and now we have slipped below 23,900 and we are at the low point of the day. 1.6% of a loss on the Nifty. We are down by 385 odd points right there, and the Sensex has also dropped over 1,300 points in trade as well. Let's also look at the Nifty Bank to see how things are looking up right there. 51,889, not looking good. 400 points down, although this is PSU Bank's media and the realty spaces. All the sectors are cracking, especially when we talk about the heavyweight IT space. That's now down by 2.5% in trade. That's the one that's dragging the sentiments for the markets. You also have the auto space that's shifted to the slower lane, about a percent, about 1.7% lower in trade for this one. And then you have infra, consumer durables, all the two constituents of the banking space, financial services and private banks, FMCG, metals. All of them have slipped. Even the broader markets are now turning flattish with the negative bias. On the Nifty, well, you have only 3 stocks which are in the green. All the rest of the stocks on the Nifty are in the red right now. So it's 47 stocks which are in the red, 3 stocks that are in the green. Which are the stocks that are holding up? Adani Enterprises, Shriram Finance and State Bank of India. The PSU index too has lost about 0.7% in trade. IRFC, BHEL, Concor, GAIL, PFCREC and even NHPC remain as the top movers within that space. Now only PSU banks and media stocks holding up among sectors in the green. India VIX has sharply shot up 5% higher at about 15.4 odd levels. Let's also look at the F&O space. Exide is the top mover. You have Gujarat Narmada Valley Fertilizers, Chambal Fertilizers, Biocon, Interglobe Aviation as among those which are moving on the higher side. But on the lower side, you again have Max Financial, SBI Life, Infosys, HDFC Life as some of those stocks that are losing further ground right there. Several of the stocks within the Adani group are still holding up strong despite this overall sharp sell-off in the market. Even though they've given up most of the gains of the day, Adani Energy holds at 10% upper circuit. Let's also look at Adani Green for that instance, 10% upper circuit for this one as well. Adani Total Gas is 16% higher. That's the one that's going strongest among all the sectoral stocks, among all the group stocks that is. Let's also talk about Adani Power. That's also up by about 8 odd percent. So some of these stocks are actually holding up pretty strong within the Adani group despite all that overall slippage in the markets. But let's welcome our guest on board to help us understand what to make of this sharp fall in the markets today. We have with us Kush Godasara now joining in to give us his take on the markets. Kush, warm welcome. Good afternoon to you. Well, we are now testing 23,900 as well on the Nifty. What's caused this sudden sharp fall in the markets today? Any 2 or 3 key reasons that you've identified?
Definitely, thank you for inviting me. So, with 3 key reasons, to look at the market for today is first technically. So, just before 2 days when we were on the caller show, we had discussed about importance of 24,400 level on weekly charts, which was a 15 weeks moving average. So we have registered exactly at that level, and the retrenchment, I mean, the fall from 26,000 to 23,200, it has retraced 38.2%. So technical points validate today's high, that this was just a short covering move and not a long built up. Second, if you look at the global setup, so look at IT stocks. Last day we have started a deep correction last night. Futures were positive today, but are weakening over there. So global setup is not looking good. That's the second reason. And third, fundamentally, if you look at auto stocks, which have been outperformance in the last 3 years, the sales have not been good. I mean, the base comparison of last year base is so higher that growth rate is not sustainable. So, and second, even if you look at DII figures in cash segment, now they are also losing confidence. We are seeing some selling from DIs also. So overall, technically, globally, and even domestically, traders and investors are losing faith in this rally because now they are irritated with the market because they are stuck at a they are stuck for a quite long time.
Right. So, Kush, once we are testing this 23,890 now, what is the downside that you expect if this rally fizzles out more? What are the levels that one should be prepared to see?
So maybe 23,600 is the last support, which is 200-day average. So if we break below 23,600, I know I might sound crazy again, but 22,000 is what I expect.
So, Kush has also talked about this before as well. He does expect this once 23,600 is broken, there could be sharper downside moves that you could be seeing in the markets right now. Kush, coming back to you where the outperformance is lying, the Adani group is trying to be resilient even in this fall, continuing with its strong move from confidence to jump into the stocks right now, or would you still stay away?
So as a disclosure, I have been investor in Adani and I'm pro Adani being in Ahmedabad. But at current levels, I won't suggest investing. There are two reasons because if you look at the Adani price, Adani port, uh, Adani Power, since the Hindenburg first report in last Jan 23, they are not able to bridge, their previous highs. So
Yeah.
there is, so fund managers, HNIs are being staying away from this counters. That is the key reason why we are not seeing any momentum. So I believe still more correction is ahead for long term. So yes, I will keep Adani Enterprise, Adani Port, and Ambuja Cement on my radar. Still 5 to 10% correction from current levels. I will
As far as the Adani group is concerned. But since you say that, there could be further downside, what are you advising clients? Should the further dips that we could see now in the markets be used for a buying opportunity? Should the strategy be any sector specific, or should one actually look at specific stocks completely in case one still is a long on markets?
For short term, I don't believe we should be long on the markets. If we go below 23,600, maybe today's fall might be just because of, say, expiry move. So wait for a confirmation. If we go below 23,600 tomorrow and close below the same level, you shouldn't be long on for the short term. Because definitely this would be the last opportunity for long-term investors to jump in because then
Yeah.
after we hit 22,000 or maybe lower levels, the next rally will last for almost 5 years, just like we had in COVID time. So don't try to catch the exact bottom. Once you are below 23,000, start buying, or maybe if you don't want to give much thought, just start your SIP or increase your SIP for next 5 months.
Okay, got that. So that's the overall view that's coming in. Let's look at a few pockets now. About the resilient pocket first, PSU banks that is showing some resilience today. Stocks like IOB, Indian Bank, PSP, Bank of Maharashtra, UCO Bank. So the second rank PSU banks are holding up in trade. Is this a trend that one should really expect to build up from here on? PSU banks have shown some signs even in this week thus far. Will this continue?
Definitely because of PSU Bank only, Bank Nifty is outperforming even on downside. So if Nifty is
Yeah.
down 5%, Bank Nifty is just 0.8. So definitely Bank PSU sector as a whole today is giving a good support. So maybe is this support strong or not? We will come to know tomorrow. So I won't chase PSU banks at least today in last 30 minutes. Rather, I
Okay.
would this confirmation.
Okay, wait for a confirmation right there. What about the FNO space? Does anything look promising here within the FNO space? Tomorrow, again, a lot of new FNO inclusions will be there. One has to track that as well. Particularly in the FNO, what is the strategy you're recommending?
So in F&O, particularly as a disclosure, I have just initiated
Okay,
positionally activity for my clients. I would
okay,
recommend to the viewers. First is sell on Tech Mahindra.
okay.
I believe IT stocks are going to underperform. So sell Tech Mahindra, stop loss at 1780 for the
Uh-huh.
December. On the downside, 1640. Second is sell on Hero MotoCorp. 1400 is the stop loss. Target is 4600. And Hindalco from the metal stocks. Sell Hindalco, 665 is the stop loss. Target would be 620.
Okay, so all three sell calls initiated in the FNO space: Tech Mahindra, Hero Moto, and Hindalco. So keep an eye out on these stocks. These could be seen as STBT candidates right there. Okay, some from the lower level, some buying getting initiated in the broader markets. The Nifty next 50 stocks, let me just look at here what is buzzing. Adani Group stocks for sure. Apart from this, Varun Beverages is pulling up in trade. You have stocks like LIC, Indigo, BHEL, some railway stocks as well. We'll discuss the railway space a little later. But what about Varun Beverages? Is a sign there to continue this momentum?
Definitely, stock has given good volumes today, but
Hmm.
look at the previous week high is exactly at today's high. So 640 is the level one should look out. If we move above 640, you can chip in for fresh entry. Otherwise, just hold your existing position with six stop loss at 620.
Okay, got that. So that's the view that's coming in on this one as well. Let's also look at one more space. So the defense and the railway space is something we should come up to. Despite the sharp sell-off in the markets, some of the defense counters are actually doing very well. So a stock like Cochin Shipyard, for instance, is up 5%. BDL is up 4.5%, Garden Reach is up 3% as well, DCX Systems, Data Patterns, Solar Industries, all of them seem to be like in buzz right now. What is your sense coming in as far as the defense stocks are concerned? Worst behind, or should one be nibbling in into these stocks now?
So maybe I would wait because I was just looking at
Hmm.
few charts this morning. Still, all the stocks are trading below 200-day average.
Okay.
So Cochin Shipyard's 200-day average is at 1640. So
Mm-hmm.
until they are above 200 average, I don't think momentum is coming back for the investors. So just wait and watch for a week. I would stay away from defense and railways as of now.
Stay away from defense and railways as of now. Okay, so both these pockets are a no-go area right now, as Kush believes. What else is buzzing is some of the within the broader markets. Let me read out a few names that are actually doing well in the, even in this market. So, for instance, you have Deep Industries that's up 11.8%. You have Bliss GVS Pharma that's been on a run, so 10%, 11% higher. Elgi Rubber is up 10%. Edelweiss Financial Services is up 10%. A strong surge can be seen on this one. Then you also have Repco Home Finance that's also buzzing sharply in trade. Let's actually discuss this entire NBFC space as well, broking space, NBFC space. Several of the stocks are moving up. CDSL CAMs, they are also coming up in trade. What looks good here? Should one really look at deploying a fresh money in this space even after the recent run up has taken place across the board, Kush?
So definitely on CDSL, that's on my watch list, and that's what I recommended to my clients
Yeah.
also. Not at the current at one SIP. So CDSL, it's a safer bet than brokerage houses because maybe brokerage houses have some risk. Doesn't have. Suggest in PSU, not even NBFC. TDSL is the stock you should watch. I think NBFCs are still in some trouble. I mean, we may see some pain ahead fundamentally. So avoiding NBFC.
Hmm. Okay, Edelweiss is at 10% higher. Repco Home Finance is almost 7.5% up. You have Spandana Spurti, that's up 6%. You have Hoodco, Fedbank Financial Services, even Muthoot Capital for that instance, buzzing. FinCorp is, Poonawalla FinCorp is also doing well, about 3% higher. So across the board, you can actually see some moves coming back into this space. Beyond this, if you look, there are very far and few between areas which can be actually discussed in the kind of moves that we are seeing in the market. Maybe some hospitality stocks again. So Indigo we discussed. Then we have some hotel hospitality stocks that are buzzing. Chalet Hotels, Royal Orchid, TGB Banquets, Country Club Hospitality stocks probably that have some buzz. Remember, it's the holiday season coming in, and these stocks are actually on the buzz too. Apart from this, real estate stocks, you have Prestige, Oberoi, Brigade, Mahindra Life Spaces also buzzing. Let's ask Kush if he has any real estate favorite right here. Kush, would you look at real estate stocks at all?
Definitely, Brigade Enterprise is my one of my favorite stock for a long-term investment because they have a good portfolio of even rental incomes. So as a cash flow, they are always on a safe position. So Brigade Enterprise is a stock one should look out for long-term investment with the stop loss of 1100. I believe the stock could go up to 1700 in the next 2 years. So from real estate sector at current levels, I would choose Brigade Enterprise.
Brigade Enterprise you will choose. Okay, got that. So we'll keep an eye out on that one too. Okay, one stock from the broader markets that I wanted to take is Irida. That's moving up sharply higher. About 5% higher is what you see this stock. It was buzzing yesterday as well, and it's continued its momentum today. This has also tested a lot of patience in the recent investors who were very big on the renewable energy space, and right from the time Irida had got listed, and those who've been holding the stock from the IPO too, are signs of a recovery coming back onto this one. It had lost a lot of ground, but it slowly and gradually inched higher than 200 odd levels. What should one do?
Definitely, definitely as a distributor holding the stock for long term in my portfolio.
Okay.
Believe this sector, as you mentioned, the sector which one should look out for next sector is, I believe, renewable sector. Being India's, if you look at India's tropical position, renewable energy is the best, outcome in India. So I believe next 10 years it is going to be of green energy. So IRIDA is a stock one should look out for 5 years, not for trading. So with the stop loss of 188 current levels, buy it, and this is a pretty mega stock.
Okay, got that. So that's as far as the view on this one is concerned. You know what also is continuing to move up higher is Zomato. Half odd percent up at 286 to 87 odd levels. Continues to hold up even in this week setup in the markets. You also have within the broader markets some other new age tech stocks like Honasa, for that instance, doing very well today, about 10% up for this one. Kush, if I have to ask you from the new age space, any key stocks that you like? Is Zomato continuing to be your top favorite?
Definitely, Zomato has been my top favorite since the day one. As a disclosure, I have been the blogger on Zomato since 2010, even when it
Okay.
was delivery, not into deliveries. So, from new age IT stocks, I believe, Swiggy and Zomato both should be in your portfolio. The reason is why what I predict from current situation is that just like telecom sector, where we only three biggies like Vodafone, Jio, and Airtel, in delivery space, commerce, I believe Amazon, Swiggy, and Zomato are going to be the largest shareholders. I mean, we may see Zepto and many other firms, but the way they are holding at India level, I think they are going to be the only key players. So both should be in your portfolio. Third stock with new age I like is Policy Bazaar. Uh, Policy Bazaar should be also in your portfolio. I believe, while buying an policy online, the first brand positioning we get in our thought is Policy Bazaar. So the way awareness of buying an insurance after COVID has increased in
Huh.
tier, I believe this is going to be a multi-bagger. So Swiggy, Zomato, and Policy Bazaar are one of my favorite stock for long term from new age IT stocks.
Okay, why did you leave out Paytm today? Again, brokerage houses are penciling in targets of above 1000 on Paytm. Is there a reason why you?
Paytm is my favorite stock, Shakshi, just because I don't understand the business. I mean, what are their margins? I mean, just transferring money from one wallet to one. Well, I mean, they have thin margins. They don't have concrete business margins. For example, in Zomato or Swiggy, they charge restaurants on the bill amount around
Yeah,
20%.
yeah.
So that they have some good revenues. I mean, strong revenues. But the Paytm I have no has never been my interest since even IPO. But I don't believe it is going to stay for a long term in the industry. That's my prediction.
Okay, got that. So taken that in. Several other pockets within the broader markets that are picking up pace now. Mid and the small caps are also turning green. Let's look at some of the stocks right there which are pulling up. Irida we've discussed. Solar Industries is one that's up. SJVN that's up as well. So renewable energy names definitely pulling up. Chemicals. Okay, let's discuss this fertilizers and the chemical space, which we haven't touched for a long time now. Some of those movers, even in the F&O space today, Gujarat Narmada Valley Fertilizers, Chambal Fertilizers, Fact is moving up. What is the long-term sense that you have on these fertilizer and chemical names? They've been extremely volatile, and the street is also divided as to where are these stocks or sectors headed. What would your view be?
Maybe for long-term investment, uh, sugar stocks, fertilizer stocks, or maybe gas distribution stocks have never been my,
Yeah.
because government has always come out, suddenly comes out with some policy for all these sectors. So it has never been a multi-bagger sector for investment. Definitely, as a trading perspective, we may get some opportunities. So for short term, I believe GNFC is a good, setup for short term trade. So strictly for short term, we can buy at for a short term move. 600 can be a stop loss and target. So I won't recommend these sectors for long term, but definitely for short term trading, you may play the range.
Okay. So that's as far as the fertilizers and the chemicals pack. But what we didn't discuss with you is the FMCG space. A lot of these stocks garnered attention right in the morning. We did see Colgate coming back on the radar of brokerage houses right there. Because, why this space was also ignored is in the Q2 numbers, most of the companies, heavyweight ones especially, came out with lower volume growth, disappointment in the earnings as well. And they did talk about consumption slowdown, especially in the urban areas right there. Signs returning on some stocks like even ITC today, maybe even a Dabur or Marico for that instance. What is your own sense of what should one's approach be towards FMCG in this current volatile market? Do you think one should continue to have at least one part of the portfolio towards these FMCG?
Definitely, I mean, FMG stocks are, we are getting at an attractive valuation. So,
Okay.
once you start buying FMG stocks, if you look at HUL, ITC, Tata Consumer, below their eyes. So, two stocks which I recommend to, aggressively recommend to invest for long term at current levels, not at one go, but at least 50% you buy today is Tata Consumer and
Okay.
ITC.
Okay.
Technically, definitely we are, in a downside trend. But for long term, I believe the way Starbucks is turning around, coffee culture in India from CCD to a premium level to Starbucks. I think Tata Consumer is a good buy. Even Himalayan Waterfront is doing good as it is a plan to go multinational. And thirdly, Tata Salt is on the same route. So, Tata Consumer is targeting each and every human in the economy. So I believe Tata Consumer is a good buy at 940, and ITC, of course, demergering their businesses in future would give an investor a good edge over their returns. So both of the stocks you should buy at least 50% today. You should have 20% extra exposure to FMCG, 10% to Tata, and 10% to ITC, and from that you buy 5% today.
Okay, fair enough. So that's the view that's coming in to hedge your portfolios right there. How you should be really divided on the stocks within the FMCG pack right there. That's something that Kush has just highlighted for us. Let me just quickly look at all the buzzing areas. Now, remember, I will circle back to the NBFCs where strong moves are being seen. Repco Home is now up 11.8%, nearly 12% higher. Edelweiss 10% higher. Swandhana Sphoorti 6% up. Hudco, Poonawalla FinCorp, Muthoot Capital, Fed Bank Financial Services. These are all the pockets that are buzzing within the financial services. PSU banks, you again have stocks like SBI, Bank of Baroda, Canara Bank, UCO, Indian Overseas, Indian Bank, all of them buzzing in trade. But actually, let's look at the private sector, which has now slipped about over a percent. Let's look at still any outliers remaining. Only City Union Bank and IDFC First Bank. Rest of the stocks have all slipped into the red. Let's look at HDFC Bank as to what it is doing. Why am I asking this is because it hit a record high level, and we did see its market cap also cross 14 lakh crores right in the morning trade, but again the rally has fizzled out. It's below 1800 mark now. Coming to you, Kush, how are you looking at HDFC Bank? It's up about 8% so far in 2024, after those 4 years of no returns or doing nothing absolutely for investors' portfolios. Some signs returning, newer records being formed, but is it going to be sustainable is the question. What is your own sense saying? As in when these dips are coming, should one lap onto the stock?
So maybe, I won't recommend to buy fresh for long term bank because it's too big now. So, it's too big to fail, of course. But if you look at a growth term, so their AUM is such a high that, growing at a 5% is also impossible because, now PSU banks and even small banks are giving same facilities. Before 10 years, senior was different. I mean, private sector banks like HDFC and ICICI were having a IT edge. But now
Oh.
every bank has same mobile applications, good services. So I believe it is not going to be a multi-bagger sector from current levels. So avoid buying fresh in HDFC Bank for long term. If you are already holding, that's good because you might have got advantage of and splits before. But if you want to buy fresh, go for IDFC First Bank. I believe there can, where there are small base and they're aggressive in expanding to rural area, and we are getting a good correction. So IDFC First Bank is my top pick from private sector. I mean, from the bank. 64 is the current level. So buy with the stop loss of 55. You may see 56 in next 2 years.
Okay, got that. So that's the view that's coming in on, the private sector banks and where exactly should you be really looking at for momentum. Let's again look at some of the other broader market names that we could probably ask Kush to give us his sense. Are there any newer names getting added? Not really. All the names we have largely covered, which are to be discussed from the broader markets. Okay, I think Varun Beverages is something I did not discuss with you when the FMCG space came in. Your own sense on this one, Kush, Varun Beverages, it's been garnering some momentum. Is it still a buy after those multi-bagger returns have come in? How much more upside could there be if somebody really looks at this stock at over 620, 630 odd levels?
So maybe for short term, I believe 640 is the target and
Hmm.
resistance. Long term, I don't think multi-bagger effect will come down because I think there is a key change in the industry. People are more moving towards renewable packaging like paper bottles and stuff. So I think I would wait and watch on VBL.
Wait and watch will be the right approach on this one as well. 3:27, 3 minutes to go. Kush, I'll ask you the last question, and that will be on what would your suggestion be for for investors looking at the Nifty in the short term, and for those looking at it from the medium term perspective? How should one be really looking at playing the market from these two perspectives? Short term would be maybe a month from now, etc. A medium term would be something around 3 to 5 months perspective. What should one's strategy be in both these scenarios?
So starting with the short-term traders, you should have two strategies in your mind. Sell below 23,600 for at least only 24,400. Don't trade between this range. Secondly, for 6 months investors, any correction below 23,600 would be an opportunity to good blue chip stocks. So don't hesitate and don't be so greedy to pick the best low. Start buying every week after we've reached 23,600.
Fair enough. Well, thank you so much, Kush, for being with us on this show to guide us and all our viewers in this current extremely volatile set of the market. So the expiry session is turned out to be a weak one for the Nifty for sure. 23,950 and thereabouts is what we are seeing. Some pullback from the lowest level is what we have seen. But even though we are below that 24,000 mark yet again, 325 points lower on the Nifty. What's exerted pressure is clearly the IT pack today. 2.2% lower for this one. Autos down by 1.5%. Private banks down by over 1%. Financial services almost 1% lower. Consumer durables also down by 1%. So at least 5 of the sectoral indices are down by over 1%. Some pullback happening. PSU banks continue to be up by 1.2%. Half odd percent surge for the media stocks. The broader markets, mid and small caps in the Nifty Next 50 are also holding up. Realty Oil and Gas also sees some pullback action coming in towards the end of the session. Adani Group stocks for the second day in a row continue to be in a sweet spot. Adani Enterprises, although has given up the morning gains and the afternoon gains, is holding up about 1.5% higher. But the ones that are actually at circuits are Adani Green, Adani Energy Solutions, Adani Total Gas up 15% in trade as well. Then you also have stocks like Adani Power building up very, very strongly in trade too. So some of the stocks, at least if not all, are actually continuing to show strong momentum within the Adani group on the consecutive third or fourth day right after the US indictment news had come in. Okay, so the screen has frozen in front of you viewers. 23,950 has remained with the Nifty. 23,959 is where we end at, 315 points lower. Just about 4 stocks managed to end higher on the Nifty. Adani Enterprises, SBI, Shriram Finance and Cipla. Rest all of the stocks on the Nifty have slipped into the red. SBI Life, HDFC Life, both dragging. M&M, HCL Tech and Bajaj Finance are the other ones that have dragged further in trade. But within the PSUs, even though the index was lower, IRFC pulled up. You had BHEL, Concor, GAIL, NHPC, PFC, REC as among the stocks that have pulled up. In the F&O space, you had stocks like BHEL again as the top mover, Excite, PNB and Gujarat Narmada Valley Fertilizers, which were hogging all the limelight. On the downside, however, SBI Life, Max Financial, HDFC Life, so some of these life insurance names definitely taking a beating in today's trading session. We'll leave you at that, viewers, but do stay tuned on to Business Today Television as the coverage will continue beyond the stock market hours on several other matters of importance that you should be tracking in the business world. Stay with us. Do tell us how over the last few days of various coming in from the US, as well as some clarifications coming in from the group. Senior advocates also talking vocally about some gaps in the US indictment, and they wanted to find out as to what is the key factor because of which Gautam Adani has been indicted, because at least in count 1 and count 5, which were the corruption acts and the violation of the Justice Act, is where his name and his nephew's name was not there. So several aspects right there for us to understand here. But how should an average retail investor really look at these sharp volatile turns on an everyday basis, just on the basis of news flows that are coming in on that day, sir?
Well, I think very importantly, the confidence in the business fundamentals of the Adani Group companies, they have not shaken because of whatever the outcome of US court or allegations that they have made, etc. I don't think that any one of us have doubted the group's ability to deliver the infrastructure projects. Today, at a group level, 85,000 crore worth of EBITDA and 20% kind of a CAGR growth for 3 years is something which is seen on paper. Against which I think the debt at around 240,000 crore, which is a 3